Okay, this is a risky segment for me to do. Why is it risky? It's risky because it's wonky and it's technical, and I don't know that people will like it. This might be the type of segment that ends up with 5,000 views on YouTube, but about 10 people have emailed me and they've asked me to do this. They've requested this. So let's do it. We are going to talk about two mechanisms which Donald Trump and other rich people can use to reduce the amount they pay in taxes. The two mechanisms are tax loss carryforwards. Please don't glaze over. Tax loss carryforwards and asset depreciation. Okay. So Donald Trump's taxes were leaked by this blockbuster New York Times report. In that New York Times report, we learned that there were some years like 2016 and 2017 when Donald Trump paid $750 in total federal taxes, total for the entire year. In 10 of the last 15 years, Donald Trump paid zero in federal taxes. How on earth is this possible? Well, it's possible thanks to something called a tax loss carryforward and asset depreciation. I'm going to explain both, and you are very quickly going to see how the tax code favors the super rich, as if you didn't already know that. So a tax loss carryforward allows you to take a loss that happened in one year and carry it forward to future years to reduce the amount of tax that you owe. So let's do like a very pedestrian example compared to what Donald Trump is doing. We'll do it with stocks. Imagine that you buy $20,000 of some stock in 1 year and it loses 50% of its value. So your $20,000 is now only $10,000. You lost $10,000. Great. You can deduct losses. You can deduct $10,000 from your taxes from the standpoint of paying capital gains, and it counts against your gains. Beautiful. But imagine that in the year that you lost the 10 grand and sold the stock and realized that loss, you only made $2,000 from all of your other stock sales. So you've got this $10,000 loss and only a $2,000 gain. Well, great news. You don't have to use the full $10,000 loss in that year. You had a $2,000 gain. You'll take just $2,000 from the 10 that you lost, and you offset a $2,000 gain with a $2,000 loss. You're at zero. You pay no capital gains. And your other $8,000 in losses can be carried over to future years. Now, maybe the next year you have a really good year in stocks and you realize $7,000 in gains. Well, you still have the $8,000 in loss that you carried over. You can use another $7,000 to offset the money you made in stocks, and again, you pay zero. Now, that sounds reasonable enough and it's simple enough, but that is small potatoes. That's not how Trump takes advantage of it. Real losses on the sale of stock are not what Donald Trump is doing. Donald Trump is generating paper losses with capital losses from huge hotels and casinos. So here's an example. In 1995, Donald Trump reported a loss of $916 million on a casino. And we'll talk about how that loss was generated. He then gets to take that $960 million loss and offset $50 million in taxes per year for 18 years. In 2008 and 2009, Donald Trump declared a loss of $1.4 billion. And he extended the ability to carry these losses forward indefinitely in his own tax plan, which was made effective in 2018. So Trump can take that $1.4 billion loss and just carry it forward indefinitely, offsetting future taxes. And the trick of it is that you can also mess with how you declare these losses. So we imagine, listen, I buy something for $1,000 and I sell it for $500. I really lost $500. That's a real loss of $500. With these huge real estate transactions and capital investments, there are all sorts of ways that you can move around assets and mess with the valuation of the assets. I'll get back to that later. to generate losses on paper, which didn't really happen in the way you or I think about losing money. And you're generating these paper losses, which you can then carry forward. Your average middle class working person can't do this. Now, the other tactic Donald Trump uses, where do you generate these losses to carry forward? One of the ways you can do it is with asset depreciation. Depreciation means the value of an asset has gone down. If I have a car that's worth $15,000 when I buy it, and after a couple of years, it's worth $10,000. That's depreciated by $5,000. Now, with a huge real estate portfolio, a hotel, a casino, a big office building, you don't just buy it and deduct it as a business expense like I would do with like an audio cable or, I bought this new microphone this year. I'm not going to depreciate this microphone over the next however many years. It's too small of an expense. I'm just going to take it as a business expense and deduct it right away. But with a huge hotel, if you claim to have a hotel worth $500 million, and then now you claim, the hotel has aged, the plumbing is older, you've got to flush the toilets 10 to 15 times, as Trump says, you could say the hotel was worth $500 million. It's now worth $250 million. I can now take $250 million in depreciation and reduce my taxes. And this is where the manipulations come into play. Michael Cohen has explained to us how Trump does this without actually changing anything in the real world. If I can claim, my $500 million hotel, it's really worth $600 million. So what that means is when it goes down in value to $250, I'm not depreciating $250 million. I can now depreciate $350 million and create a loss carry forward that I can use for the next however many years. It's all imaginary. It's all merely pushing paper. It's accounting mechanisms. And we know Trump did this. The taxes prove it. And Michael Cohen and others have told us Donald Trump, for publicity purposes or for tax purposes or for whatever reason to get a loan, Trump will inflate asset values when it's convenient or deflate asset values when it's convenient. These are the mechanisms Trump has used. This is how they work. Hopefully it's useful to folks to understand it.